5 mistakes that's stopping you from making money trading the supply and demand methodology, or in this case, this can really go for any trading strategy out there. I've been doing this for over 8 years, helping traders become consistently profitable. So I have seen the mistakes specifically about this supply and demand methodology, and I'm here to share with you what they are. Let's get into it. I would appreciate if you guys like the video, and if you guys have any questions, let me know in the comments below, or you can reach out to me on social media at Moneyball Austin. Let's get into the first three. So number 1, 2, and 3, we're going to kind of combine them together, and I'm going to showcase a real example. I'm working with somebody right now, and that's going to be number 1, no journaling, no review process, and no back testing. Okay, from time and time again, guys, the amount of information that you can learn from just journaling your trades. I don't care if you don't back test, but you have to journal your trades, because how do you expect to know where you are going wrong with your trading if you don't journal your trades? You take a picture of your trades and add any notes to it. This is a trader here who is asking for support in one of the Moneyball trading programs here. And she did a 30 trade back test. This is something I will always do, and I always go through a one-on-one training with them after they have 30 or 40 trades to help them identify what is working and what is not working. But I can't do that if they don't journal their trades. Just all I need to see from these people in the group is at least a picture so I can identify where they might be going wrong. So here we have 30 trades, 30 or 40 trades that she has documented. And the overall results with this, she was taking confirmation, set and forget, trending markets, counter trend markets. That's great. There's going to be good trades and bad trades from this. And we're going to look at the stats, because I asked her, hey, these are the stats I want you to break down. Obviously, we don't have enough trades to look at, but we can try to figure out what is making you money and what is costing you money. All right, this is the whole process. And this is one of the big mistakes, because if you don't journal your trades and you don't have a proper review system, this is journaling, back testing, review right here. This is what a huge difference is. So she has 30 or 40 trades. So here are the stats here on this trade. Max ideal reward to risk. That's kind of the software telling you ideally what is the best reward to risk so you can make the most amount of money. But then I asked her, okay, these are the stats that I want you to actually review. I want you to go through all your trades, because I know she took a lot of set and forgets, confirmation, counter trend, trending, sideways, tested zones, and all that. And so we figured out set and forgets, 9 winners, 9 losers. Okay, that's cool. Confirmation, 5 winners, 5 losers. That's totally fine. When it came to this is interesting. This will back up my stats. Let me scroll in so you guys can see. Trending, when she's trading with the trend, 8 winners and 8 losers. Okay, 50-50%, that's okay. Sideways, winners, 6 winners, 2 losers. But when you look at counter trend, 1 winner and 4 losers. Now, obviously, this is not enough trades, but she can identify that and say, clearly my counter trend trades are not as good. And I agree. Every time I do my review, I share my stats with people and I say, hey, this is what's working, what's not working. And I ask everybody to do this after 40 trades, 50 trades, or after a 6-month review so we can see what's working and what's not working. Okay. So that might be something that she gets rid of, trading counter trend. Multiple time frame analysis versus the single time frame. Not enough data, but clearly multiple time frame was doing well. Clean arrivals versus poor arrivals. How does prices come back into your entry? And then what is the quality? If you guys are trading supply and demand, there's a video that I did. I will pop it on the screen for you guys, so you guys can look at that, and it will show you good quality zones versus poor quality zones. Because I get a lot of people that reach out to me and they're like, is this a good zone? Is this a good zone? Is this a good trade or bad trade, right? And I'm like, it's horrible. You can tell the most amount of your winners come from the strongest leg outs. This is when we go to the chart. Like, say, for example, very strong imbalance to the downside right here. So if we scroll in, very strong move to the downside. Okay, that's ideally what I want to be trading. I don't want to be trading, say in this case, how it just slowly grinds down. That really doesn't tell me that there's a significant amount of buyers or sellers in that area. And typically, as supply and demand traders, you are looking for strong imbalances. Well, so we were comparing in all the trade reviews, the good quality trade setups versus the bad quality. And you know what? She's noticing the zones that have very strong imbalances, that remove opposing pivot point zones, that maybe break structure. Those zones work a lot better than if it's a grinding zone. So an example would be like An example here on Euro New Zealand, you can kind of see how prices are just grinding up here. Those aren't any zones that I would be looking to buy at, but instead I might be looking for sells up in here. Why? Very strong in balance, maybe remove the opposing zones, whatever. I'm not here to discuss the quality of the zone, but I'm here to identify the mistakes that people are making here. Okay. And so without a proper back testing, reviewing, and journaling, you're never going to make money in this game, because chances are you are making good trades, whatever trading strategy you are trading, whether it's with indicators or some other trading strategy. You just aren't having a proper review to see what's making you money versus what is not making you money. Okay. And so if you guys have any questions about that, you guys can always reach out to me on social media at Moneyball Austin. And send me your trade reviews, ask questions, no problem at all. Okay. Back testing, another point on that before we get to our next one. Back testing is extremely important because it's going to help you build a better trading strategy. It's going to let you know quickly, instead of going off for a month and 2 months or 3 months trading a strategy. It's going to let you know quickly whether the stats are good or bad. And then you can also judge it, saying, hey, you know what? I don't like a 30% win rate. How can I change that to maybe get it to a higher win rate? Okay. And that's kind of what I help people doing in the Moneyball trading program when they do their back testing. And I think next week we're actually doing a group meeting where everybody, every 6 months, everybody does a back test or reviews. And we kind of say, like, hey, what's working, what's not working? Here's what I've adjusted, and so on and so on. So make sure you start doing those three, and you will be on your way to becoming a profitable day trader. Now, the next thing we got to talk about is having a trading plan and a risk management. Now, honestly, when I think about this now, trading plan could actually be in those top three, top four. We could just merge them together, because once you have a trading plan, how do you create a trading plan? Well, knowledge on the trading system, back testing, journaling, and you slowly build a better trading plan, right? So that kind of goes full circle, making sure that you're consistent with your trading strategy. Now, the next thing we got to talk about is risk management. This is extremely important for the trader's success, because time and time again, I see people, risking 5-10% of their bankroll or of their trading account on certain trades. And if they lose 2, 3, or 4 in a row, which is not uncommon, they blow up their account or they lose 50% of their account. Like, you're never going to make money consistently if you're not having proper risk management. So what I recommend is starting with 0.5 to 1. And if you notice, hey, you went 2 months in a row and you think you can bump it up and you're making money consistently, well, then just elevate the risk a little bit. Say, okay, I want to go from 0.5 to 1. Okay. And if you're still having problems mentally with that money issue, then that's a psychology problem. But I have made 2 videos. I will pop that up on the screen and have it down below. And since I'm actually talking about videos, there's a 30-day challenge that I do recommend everybody taking, but it's a 30-day challenge of what I want people to take. And we're actually starting a new month. It's June 1st as of now. It's a great time to start that challenge. So I will leave that video down below. And it's about taking one certain trade setup consistently for the next 30 days and then reviewing after those 30 trades, whether you make money or lose money. And then you can properly sort out your winners and losers. Okay. So far we've talked about no journaling, review process, back testing, trading plan, no risk management. And the last thing I wanted to talk about, and we're going to merge these 3 in together, it's going to be expectations and knowledge. Now, knowledge is extremely important, because if you just go into the market thinking that you're just going to use one trading indicator, it's simply not going to work. There are already indicators or EAs out there that will time a certain buy entry or sell entry once you have prices below the 200 moving average, bouncing off the top of the Bollinger Band, RSI overbought, and once the RSI starts to turn, then it will execute a short entry. It will only enter a trade once you have all 3 or 4 of those in common. Okay? It's not as easy trading as just lining up a simple indicator. Okay? But you have to have a good sense of knowledge. Okay? And you have to understand what your system is. You can't just rely completely off of a trading indicator or 100% off of support and resistance, because there are already indicators or EAs out there that will trade them exactly when they line up. All right. And people don't make money. All right. So you have to have something else. One thing that we have to talk about, though, is the expectations. One person reached out to me this week, and I'm going to bring it up. I'm not going to mention his name, but if he's watching this video, he knows who he is. He asked me, he says, I want to make 10% per month and ideally 2 trade setups a day with a 50% win rate and a 2-to-1 reward to risk. That's what he wants. 10% per month, 2 trades per day, 50% win rate with a 2-to-1 reward to risk. He said, ideally, I don't want to be losing a lot of trades. It will keep me sane if I have a 50-50 win loss. I want to make more than I risk. Okay. And I want to make 10% per month. And I said, okay, I can break this down. So based off of his actual criteria that he mentioned, 2 trades per day, that's actually 20 trades a month. And with the stats, the information that he gave me, he's actually not averaging 10% a month, but 20% a month. 20%. Now, we could get into a whole different spiel about how people will lie to you on their reward to risk or their win loss percentage based off of taking 2 positions, one position getting out at 1.1 or like 0.1 reward to risk, and then they let their second position ride. But that 0.1 position is really just to elevate their reward to risk to trick people into thinking that they're good traders. That's a completely different story. All right. But 20% per month is insane. I surround myself around traders. And every trader that I know does not consistently make 20% per month. Okay. But they will on the low end, 2 to maybe 6%. That's a lot more reasonable to actually make consistently. You look at the hedge funds, what are they making? I don't know, 10%, 20% per year. All right. And these guys are spending millions and millions, hundreds of millions of dollars on the information and people that are working for them. And they manage to make 10 to 20% per month. Okay. Statistically, year over year, the stock market will return 10%. That's just if you always invested into the stock market. You'd be making like an 8 or 10% per year. Those hedge funds are making like 15 to 20%. And if you can go off and start making 20% or 10% per month, these people will throw hundreds of millions of dollars at you. Frankly, it's just not the reality of it. So I would instead focus on just, if you focus on, like I said, journaling, reviewing process, creating a better trading strategy, the returns will come. And so overall, you have to ground your expectations. It's not as easy as the Instagrammers sitting in front of their Lamborghinis selling you a $5 signal. Frankly, it's not. I'm not going to be the guy that says, yes, it is. Okay. If it is, feel free to DM me who these people are because I have yet to actually see them. So if you guys would like to learn more about the trading strategy that I am trading, like I said, head over to the tips playlist and that will help you there. The 30-day challenge will be in the description below and any other videos I mentioned throughout this. I really appreciate if you guys like the video, subscribe, and if you have any questions, let me know in the comments below, and I have no problem helping you there. So enjoy. I will see you guys soon. Thank you so much. Bye-bye.